I think in the last 3-4 years, the Saudi government has taken several steps to strengthen the investment case for Saudi Arabia.
The growth in demographics in Africa is either a huge burden or a huge opportunity.
This is a panel looking at the investment opportunities and the investment environment in the region, so the Middle East, Africa, and Southeast Asia, which seems like quite a big region to cover, but we'll do our best. Thank you very much to my panel for joining us. I have Christophe Charlier, the chairman of Renaissance Capital, Vivek Kudva, the managing director at Franklin Templeton Investments. He's the head of Europe, Middle East, Africa, and India. We have Karim El Solh, the co-founder and chief executive of Gulf Capital, which manages about $3 billion in the region and is based out of Abu Dhabi. And we have Mouayed Makhlouf, the director of the Middle East and North Africa at the International Finance Corp of the World Bank. We're going to try something a little bit funky to start with. We're going to have a live poll, so you can all vote on your apps. And the question is, for the region, for the Middle East, I think we'll keep it to the Middle East, looking at the next 12 months, would you be overweight, would you be underweight, or would you be neutral and maintain your holding? And we'll see the results come up on the screens as we go. Vivek, starting on that, you're overweight Saudi Arabia and the UAE when you look at the region. When you're overweight Saudi Arabia, is it because you're looking to cash in on the uptick in the Tadawul when Saudi Arabia joins the MSCI Global Emerging Markets Index? Or is it a bet on the fundamentals, which is essentially a bet on Crown Prince Mohammed bin Salman and his Vision 2030 reform plan?
I would say it's the latter, but the former is also an important part of the reason why we are overweight. I think in the last 3-4 years, the Saudi government has taken several steps to strengthen the investment case for Saudi Arabia. And let's look at some of the things quickly, what they've done. So firstly, when the oil prices fell, they cut back on their spending by roughly 25%. And that, along with the subsequent uptick in the price of oil, helped them bring down their fiscal deficit from 17% to 4.9%. And in fact, in 2019, it is expected to be 4.2%. Then if you look at some of the capital market structural changes and improvements, from short selling to the securities lending and borrowing mechanism. If you look at the primary dealer system that they've set up, all I think are positive and makes it easier, to actually trade and actually do, buy and sell securities in Saudi Arabia. So, then the other thing that they've done is they have, they're trying to move away from their dependence on oil. And I'll come back to, of course, the big one is really there is, the possible listing of Saudi Aramco in, which I think the date now is 2021. But even otherwise, they have introduced expat levies. They have introduced VAT. They have done some structural reforms on tax. If you look at beyond that, recently, they've allowed women to drive. Now, when you think, what's the implication? Okay, one is women driving. What's the implication of that? Firstly, it has a positive impact on, say, for example, the car leasing and insurance business. Then if you have family with double income family, so more, income, disposable income in the hands of, of people. So if you look at all of that, and the fact that the GCC is now part of the EMBI, JP Morgan EMBI index, so that we expect several tens of billions of dollars will flow into the GCC, and Saudi Arabia will be a big beneficiary of that, as well as the inclusion of Saudi in the FT, FTSE Russell and the MSCI indices, which we think will bring in about $40 billion initially from the passive investments that just get mandatorily allocated, and then from active investments. Finally, if you just look at it, the Saudi Arabia, the foreign investment in Saudi Arabia market is just 70%. And in Qatar and UAE is 8 to 10%. Why is this such a big difference? So for all these reasons, we believe that Saudi presents a good opportunity going forward, and that's one of the reasons why we are.
But you said the government has taken some steps to improve the investment climate. There would also be those who would say there have been steps taken that have created a negative investment climate, and I'm thinking of the crackdown on corruption and the incarceration of the BRICS in November 2017, also the Khashoggi killing in October. Both those had an impact on foreign and domestic investor sentiment, and I was told yesterday that the private sector is on strike, essentially, in Saudi Arabia. How much of an impact do you think those events have had, and will foreign investors, particularly in terms of FDI, come in if the Saudi domestic sector is sort of sitting on its cash and not investing itself?
So, I mean, that's it's an interesting question that you pose. Look, from our perspective, we invest in the public markets, and we invest in the public markets on behalf of institutions and on behalf of retail investors or global investors, right? As far as institutional investors go, if they don't want us to invest in a certain country or in certain sectors like tobacco, alcohol, whatever it is, that's the mandate. When we do the segregated accounts, segregated mandates, we don't invest. We invest as per their requirements. As for the retail investors, from our perspective, we have to look at the best opportunities that are present. And those opportunities across countries may change over a period of time, right? And once we do so, everything else for us is a lot of noise, right? Because we're investing in public markets with a mandate from investors, a specific mandate to invest in specific markets, the best opportunities that can be found. And therefore, we believe that with all the changes that are happening in Saudi, notwithstanding what happened, that it's positive. We see a reason to be overweight. I just one final point, in the corruption thing you mentioned. I mean, I've heard that the government collected $106 billion as a result of that. You could argue that it's coercion or whatever it is, but that would have ultimately been beneficial to the Saudi economy. So
Karim, you look to invest in the private equity space across the region. Are you seeing opportunities in Saudi Arabia? Are you seeing attractive assets where it's easy to go in? And similar in the UAE, we're seeing a slowdown in the UAE at the moment. Is that creating opportunities for you?
Well, we've been very active investing in Saudi Arabia. We like what we see. We like the new Vision 2030, both in Saudi and here. We are beyond leadership, determined leadership that are ready to structure the economies and investing in the industries of the future. So, for example, take Saudi. If you told me 5 years ago I'd be looking at investing in tourism and entertainment in Saudi, I wouldn't have believed it. But these are real new industries coming up. We just closed the largest fintech deal in Saudi Arabia, buying into a company called Jitia, which is a payment solutions provider. And it's clear Saudi is moving to the vision is to move towards a cashless society, embracing technology, strong momentum, and we like what we see. We want to be part of it. So we're active investors in Saudi and UAE and in the region as a whole.
And in the UAE, particularly in Dubai, we're hearing anecdotally about the slowdown. How severe do you expect the slowdown to be? And are you starting to see companies under stress now? How would you describe what we're seeing?
As a private equity firm, we have 3 private equity funds, 2 private debt funds, and our job is to find the best opportunities. And our deal flow pipeline has increased dramatically these days, and the IPO market is not open, and bank liquidity has dried up. So for us, it's an opportunity to come and be a provider of growth capital. And actually, I'm quite impressed. We're seeing more companies, better quality companies, who are acquiring controlling stakes at lower valuations. So for me, that feels like a great vintage. And I'm a believer in UAE, in Dubai, and in the region, and we've gone through many cycles, and we're just preparing for the upswing. So from my perspective, it's a great time to be investing back in high-quality companies with very ambitious entrepreneurs, and we're seeing a lot of them in Dubai.
We heard the previous panel talk about Egypt and the measures the government's taken in terms of cutting subsidies, developing the pound, introduce VAT, and you're seeing growth of 5% now. I think a key question throughout the region is, are we seeing the growth or the investment that's needed to trickle down and deal with this youth knowledge? Particularly in a country like Saudi Arabia, high youth unemployment, Egypt, 100 million population, high youth unemployment. Are we seeing that?
Thanks a lot. So you're absolutely right. I think what's clear that that problem comes from the World Bank report. It said the MENA region needs to create about 300 million jobs by 2050, basically double the population in terms of jobs. So there's a huge job agenda in front of us. And your question is spot on whether the governments of this region are doing, or taking the right steps to kind of fulfill this agenda or tackle this agenda as a whole. Egypt, since you asked about Egypt, needs to create about 700,000 jobs a year. And it's the largest, it's the fastest growing market in the region, about 5.3%. The region is growing about 2 to 3%, so the hypothesis of Martin in the morning is true, for the region at least. But Egypt is growing faster than this. What we have seen in Egypt, if we want to zoom down on Egypt a little bit, is a clear economic stabilization that was done through a clear IMF program. So they devalued their currency, they floated the currency, they have tackled the issue of subsidies, especially on the energy side, etc. What we have not seen, and this is hopefully the next step, is that on the macro kind of structural reform. When you look at Egypt, I know differentiating Egypt from other markets, their doing business report is still lagging behind other markets. In MENA specifically, there's still around 120 in the doing business report. So there's a lot of structural reform that has to be tackled there. And that, to me, will be only done through a private sector participation. What we have in MENA, in large, is a region that is mostly the services are provided by the public sector. There is an issue of social contract, and we've dealt with it over the past few years. The social contract in MENA is as such where most of the services are provided mainly by the public sector. But what you ended up with, and this is the picture again in Egypt and across the whole region, is a huge public that has been rising for the past few years. So Egypt is around 96%. Jordan is more or less the same, 97, 98%. Lebanon, 150%, etc., etc. Probably Morocco is in a better shape at 60%. But in all, you have a picture of rising public debt with mediocre public services. The solution to all this is, and the way to create the jobs that we mentioned is to bring the private sector into the picture. And that, to be honest, has happened to a certain extent, not to the same level that we would like to see. That can only be done if you deal with the structural reform that I talked about earlier.
You keep talking about the private sector and the importance of the private sector, and that's crucial for job creation. One thing you hear about Egypt a lot is the role of the military in the economy. President Sisi's acknowledged that. I mean, he's an entrepreneur, essentially. He says he needed to kickstart the economy. But the question is it putting people off? Is it putting off this kind of foreign direct investment we need because it's opaque, because people are worried about this is getting expropriated or whatever it is? Is that something that you're going to have to address?
Absolutely. We call it the role of the military or role of the state. That's called the role of the state, and that's across the region. The role of the states, and as I mentioned earlier, is massive. It's definitely crowds out the private sector. It's taking the role of the private sector in providing a lot of the services. And that's the issue of social contract that I talked about. For us, the main thing we need to tackle in this region are two things, really, growth and jobs. And I really believe both of these things can only come through a larger private sector participation. When you compare MENA to other regions and look at the level of investment that are coming from the private sector, we usually take Latin America, for example. MENA region is only 1/5 in terms of private sector participation. compared to Latin America. And that's really lacking. So for us to create the growth that we want to go beyond this 2 to 3% that we've been averaging, and tackle the issue of the jobs, that is a massive and serious issue for all of MENA, we need to bring the private sector. From IFC's perspective, of course, we have been supporting private sector investments across the region, and last year was one of our best years, to be honest. We invested around $2 billion in FY18, which is from July 1st to June 30th. But for us to keep that momentum of making investments in the region, and even go beyond $2 billion, for us, that space for the private sector needs to be widened, where the government needs to step back and let the private sector be part of this service providing kind of mechanism that we are not seeing. There's a lot of reform that takes place, takes place. There's a lot of structural reform. Egypt has done well, but they need to take it further up, I would say, especially in the structural reforms space.
It feels like in a lot of these countries we're in a bit of a race against time. We've seen protests in Tunisia, in Jordan, in Algeria today, in Sudan. Do the governments get it? Is the narrative changing? If we're talking about investment, you need to open up the economy, you need to give the private sector space. Is that changing?
Very good question. And I'll tell you, believe it or not, I think now we see a difference. We see that governments are getting it because of one simple reason, because of the public debt. Because they're reaching a level of public debt that cannot be sustained. When you go to a level at 150%, even Morocco, I mean, we talk a lot to the Moroccan authorities, the government, Minister of Finance, in Egypt, etc. Morocco, when it's at 60%, they're saying this is our prudential limit. This is where we cannot exceed. Our constitution does not allow us to go beyond the 60% of public debt. What that means is we need private sector to come in. That triggers the reform that. So for the first time, because of the massive rise in public debt across the region, we see a difference. Our narrative with these governments has changed. They're actually, for them, they're coming to us and they say, can you help us with reform? Can you help us put the right structural reforms, be it registration, licenses, ease of doing business, etc. Can you help us with all this so we can bring greater private sector participation into the region? One of the best governments that we've seen in this is Jordan. And I think it's worth acknowledging what the Jordanian government has done, especially in the area of PPPs. They brought the private sector, they've done very well in the PPP law, in bringing private sector participation in many industries in the economy, be it power, renewable, transport. I'm sure many of you have seen the Queen Ali Airport, that's all done by the private sector, etc., etc. Now they're doing education, private sector concessions through bringing private sector providers. So some governments have done it well, others, they need a lot of catch up.
Christophe, a lot of your focus is on Africa, and the demographics are quite similar in terms of this youth bulge. And the key issue seems to be you can look at it as a dividend, or you can look at it as a risk. What needs to be done to ensure it becomes the dividend? Are you seeing, certainly in the key markets, Nigeria, the most populous country in Africa, Ethiopia, 100 million people, are you seeing the kind of change that makes you optimistic that this will be a dividend?
Well, first, since we're going to be talking about Ethiopia, I just want to share my condolences for the families and loved ones of the people who passed away in the Ethiopian Airlines plane yesterday. Absolutely, the growth in demographics in Africa is either a huge burden or a huge opportunity. Going back to Ethiopia, 102 million people, you have about 2 million young adults coming into the workforce every single year. And the kind of growth that you've seen in Ethiopia in the last few years, 10% growth over the last 10 years, has been really fueled by states' investment in infrastructure and agriculture, which hasn't been inclusive growth. It hasn't increased the quality of jobs that are available for the population. And I think Prime Minister Abiy has understood that. He understands the role of the private sector. He has made it very clear that improving the ease of doing business is a key target for him. He has taken the right decisions on liberalizing the economy. Now, the real test will be privatization. They've announced that they're going to privatize some of the key industries, starting with telecoms. I think if they're able to do that and bring competition at the same time into the industry, so it's not only privatizing to raise money, but it's fundamentally changing the industries to create jobs, to make it inclusive. Now when you talk about telecoms, you also talk about financial inclusion. So along with that needs to come reforms in the banking sector. So all of that, is a big task for governments in Nigeria, Ethiopia, that have a huge population growth of youngsters coming into the workforce, and they need to get it right, otherwise it's going to be quite dangerous.
Yeah. I mean, I think you're seeing a huge amount of interest from the Middle East in Ethiopia, partly because of its geographical position, partly because of the big consumer market it offers potentially. I think, as you say, Prime Minister Abiy is trying to open up, but he's doing it after years of essentially a state-controlled socialist system, and it's kind of a bit like Martin was talking about, moving from an autocracy and sort of having this sort of change or transformation. Is it easy to work there? Do you think that he can push ahead with these reforms, which would be transformational in terms of the privatizations you're talking about? And how easy is there as a foreign investor to get into what was a very closed market and take advantage of what's happening there?
Well, on the ground in Ethiopia, one of the big issues that the state needs to address is access to foreign currency. A lot of the companies have their growth significantly restricted because of lack of access to domestic input to the products that they produce. And so that's obviously a big issue that the government needs to tackle. And then it's basically the state liberalizing and letting the private sector go, as I said, in telecoms and in financial industries, allowing foreign companies and competition to come into place. So taking away the state monopolies in these industries will be critical.
Right. We're supposed to cover South Asia as well, and there's a very big market you know very well, which has its own demographic issues, which is India. There's an election beginning in April, I think April 19th, and it'll go through till May just because it's so big, 900 million voters. I mean, a real democracy at work. How will the election impact on the investment environment there? I mean, you've had the Modi term, which he's done some pretty, let's say, aggressive moves in terms of the economy, demonetization, the GTS. We've had a change at the central bank government at the central bank recently, which raised some eyebrows about the independence of the central bank. What should investors looking at India be looking out for in terms of the election and how the result might impact on economic policy and the trajectory India takes?
Let me first give you a flavor of some of the reforms and major reforms that the government has done. And then I'll come to the election and what that impact of the election might be. So if you just look at it, it's the GST. Remember, the government brought in GST, implemented it, even though it didn't have a majority in one of the houses of parliament. If it had it, it would have been much easier. So that was one. Then there's the Insolvency and Bankruptcy Code, which is making it easier to get closure on non-performing assets. And part of the bank, the way it's written, the code, that basically promoters who have liabilities outstanding to the banks and have not made good on their liabilities won't be able to bid under the IBC process for ownership of the asset. So this is a situation where for the first time, industrialists who own these big assets are actually going to lose the assets, right? So it's a very big reform. You have several others, and I don't want to go into too many of them, but there is the ease of doing business. If you look at India, has moved up, I think 30, 40, numbers, ranks in the ease of doing business. So there's the whole digital ecosystem that the government is creating to enable citizens to engage with the government and avail government services in a transparent manner. So you log in your complaint, and then it has to get resolved. And if it doesn't get resolved, it's all there for people to see that it hasn't got resolved. So there's government officials who are moving to take action because they couldn't, hide on some pretext or the other. So there's a lot of things that's been done. You talked about demonetization. Personally, if you ask me, I think it was very harsh and caused untold hardship to a lot of people. So that was in the immediate aftermath of the demonetization. If you look today, what's happened is that all the money that was sucked out of the system is back in the system. But the two things that the government is now saying that, and they had said were what the reasons why they did demonetization. One was to actually reduce, the black money in the system and get more taxpayers into the net. The taxpayers have gone up by about 25 to 30%. So as a result of this, and the second is that they've said that all the guys who deposited their cash into the system, they're going to go after them. There are about 100,000 folks who put a lot of money into the banking system. So the jury is still out whether they can achieve that, and that will mean significant improvement to future taxes and the government coffers. If they do, then it's positive. Overall, you can say it worked, and otherwise you can say it didn't work. Now, as far as the elections go, if you had asked me 3 months ago, I would have said that the opposition is gaining ground on the government. They've formed a kind of coalition, and the expectation was that the Modi government would. So in the last election, the Modi government, or the BJP on its own, got a majority, and then you had coalition partners contributed about 60 seats, and so the government had about 60% majority in the Lok Sabha. The way it was going 3 months ago, it was appearing that the government would not get more than about 220 seats. But then there was this terrorist attack in northern India, and the government's swift response to a preemptive strike on some of the terrorist hideouts. And that's created a groundswell of opinion in favor of the government, that the government took very, very strong action and positive action. The narrative now from the opposition gaining ground, a lot of the discussion is now centered around what the government did and then how it all worked out. So at this point of time, it's looking like the government has gained some ground. But in my view, even if it's a coalition government, and I know a lot of foreign investors are worried, but India has done remarkably well even with coalition governments. It creates some checks and balances. In a large democracy, I think having some checks and balances is good. And I think a coalition government will be good. Now, if the government gets less than 220, the BJP gets less than 200 seats, there's the big question is, can Modi and Amit Shah, the two stalwarts of the BJP, can they get enough coalition partners to support them? And if they don't, then what happens is a little bit of a question mark. On balance, I think from an economic growth perspective, I don't think either way there's going to be such an impact. So that's my view.
Thanks for that.
Sorry, it's a bit long, but...
It's very interesting. Karim, the PE space seems critical to SMEs, to growth, etc. And in the UAE, that PE space has changed with the collapse of Abraj. How has that impacted on the industry here and the reputation of PE, let's say? And I've got a question for Anonymous, and I wanted to ask you, I think you're best placed to answer it. Would introducing bankruptcy law in the UAE help improving banking and financial stability? 2 questions for you.
Sorry, what's the second question?
Would introducing bankruptcy law in the UAE help improve banking and financial stability?
All right. 2 difficult questions.
Yeah.
Look, there's no doubt what happened to Abraj is a concern for the whole region and for the whole industry and private equity in emerging markets. But there are many lessons to be learned there. And I think a lot of the players in private equity are investing in corporate governance, reporting, transparency, and they will end up for the better. For example, we at Gulf Capital, from day one, the majority of our funds came from abroad, and we're reporting at US standards. So our funds were SEC registered in the US. Our auditor was in New York, our custodian is in Dublin, our law firm is in London, and from day one we are at those standards. But we are still investing in more controls. So for example, we're about to issue the first controls report, which is an annual report by one of the big four showing the flow of funds, segregation of funds, financial discipline, the quality of the reporting. So we're continuously investing in this and upgrading our standards. And I tell our global investors, it's not because you're investing in emerging markets that you have to compromise in the integrity of reporting or transparency. So that's something we're focused on. So is compliance and transparency. So I think the industry will emerge stronger. There'll be more regulation, which is welcome. It's necessary to give comfort to our global investors, but we will definitely change, and hopefully for the better. Right. And on the second question on the bankruptcy laws, that's a welcome development. For example, in Saudi, there was a big mess on the Saad Mana bankruptcy case, and now there's a bankruptcy law that allows the creditors to resolve the situation and move forward. It's been like almost a decade where they're stalled and not able to solve the issue. And the creditors need to know their rights, the shareholders need to know their rights. So in a way, this is a positive step. So for example, we have 2 mezzanine funds, we are lenders, and we need to know where we are in the capital structure, what are our rights, how do we deploy our money, how we structure our investments. So having clear bankruptcy laws and knowing our seniority or how we stack in the capital structure is important and gives us the confidence to invest more in such situations, essentially.
Okay, thanks, Karim. I'm told time's up, but I think there's a key question we haven't asked, and it goes to creating a good investment climate. You need a skilled, educated workforce, particularly with this youth bulge. Mouayed, are we seeing enough being done in terms of education? And here I'm thinking, particularly the big populous markets, your Saudi Arabias, your Egypts. Are we seeing the education reforms those countries need to create a workforce to match what the private sector is looking for?
Thanks a lot. We have issued earlier this year something called the Human Capital Index by the World Bank. It was a big project that was sponsored by the president himself. And in that Human Capital Index, we actually rank countries in terms of their human capital, similar to the way we rank them when it comes to doing business. And I can tell you the region did not score very well on that human capital. The Human Capital Index looks at the number of years of learning, not education. And clearly in MENA, in terms of number of years spent is very high, but the learning aspect of those years is very low. So most of the region is below 0.5, so, which is half of what is supposed to get. There's plenty of room to be done on human capital itself and the education level. I'll take Egypt. We are engaged with the Egyptian government through our public sector arm, the World Bank, on a huge educational reform. But that's actually a much longer discussion than the typical reform that you see when it comes to energy or transport or other stuff. It needs huge commitment from the government. I can tell you one thing that we've learned in a place like Egypt and many other countries. The more educated you are, the less likelihood of getting a job you have. So the education and job, let's say, having a job are not correlated. That means the education that you're getting in the region is actually not what the job market is looking for. We've also confirmed this from our E4E initiative that we've done a few years ago, which is education for employment. So our youth in general are not getting the right education. Is it enough what is being done in our big market? I would say not yet. I think this is an initiative that would take a few years to see the results of. It's not a reform program that you can see the result of next year. You're talking about generations. The discussion has started, which is good with most of these governments. I think that what this Human Capital Index highlighted is that there is something to be done. And they're all now watching. Actually, most of these governments in MENA were the first to come to say, can you rank us first? Because it was a pilot with few countries in the world to start with. Most of the MENA countries came forward and said, we want to do something about this. So this is an ongoing education with the World Bank. reform in many of these countries. I think the result of this will take a few years to come.
Okay. And if I can say one word just very quickly, what we've seen in the research we've done for Africa, the importance of adult literacy rates, based on the examples of other emerging markets, namely in Asia, is that a country can't really industrialize until it has about 70% adult literacy rates. And a lot of the countries in the regions that we cover are way below that, and the education is not being put in place for the adults or the children to reach those levels anytime soon. So massive investment.
Yeah, very good point, Christophe. We're running very short of time, and apologies for us running over. But I think you're very much part of the conference, so we will take free questions from the audience if we see any raised hands, and there should be microphones going around. If everybody's hungry and wants to go to lunch, keep your hands down. Everybody's hungry, I think. Oh, there's one question there.
A quick question for Karim. How do you see exits happening, Karim, in the region in terms of private equity?
I think the region had exit problem. Exits were few. And part of it is the private equity industry is not developed. If you look at the US or Europe, there's a very active secondary and tertiary market where private equity firms sell to each other. I think there's no one almost left for us to sell to. But the positive thing for us is we're surprised how often the global buyout funds are approaching us. So we are a mid-market firm. We write checks of $50 to $100 million, and a lot of the big buyout funds come to us and say, once your companies grow, we would like to buy into those. The other thing we've seen recently is the arrival of the Asian strategic buyers. So we've done 3 deals, taking companies from here into Asia and selling to strategics. Companies like Mitsubishi in Japan, Fosun in China, Indorama in Thailand, Webjet in Australia have all bought companies from us. So this is very interesting, and you're seeing the Near and the Far East meeting. And this is a trend we didn't see a few years back, but they're knocking on our doors and buying our companies, and that's a very welcome exit. The last exit route we've been very successful at is taking companies from Middle East and listing them on the London Stock Exchange. We had a beautiful IPO for Gulf Marine Services on the London Stock Exchange, Addis Drilling. So we've listed a company in Oslo. So we've sold locally, regionally in Asia, and in listed companies in Europe. And sometimes you have to cobble all of these different exit routes to have enough critical mass in terms of exits.
Great. I think if there are no more questions. Oh, there is one more. There's a lady over here. Last question, then we'll go for lunch, I promise.
Hi, everyone. It's a question about, in current climate, we talk about Trump effect, we talk about Brexit, we talk about beautiful assets region has, which are oil. If we think about the SME sector, where do you think the most exciting opportunities lie in a region, keeping in mind global trends, keeping in mind that we invest not short-term, but long-term? Where you think money to be made in region apart from oil?
Okay.
Thank you.
We'll keep our answers succinct, please, gents. Christophe, and then we'll work down.
Well, in my region, in Africa, what we're very excited about is the free trade agreement and all of the opportunities that will create. I would have to go, though, for anything tied to the consumer, so fast-moving consumer goods, given the demographic growth.
Okay. Vivek?
Yeah, I would also say it's consumption. And I think in some markets, it could also be led by deleveraging of customers.
Okay. Karim?
I'm very excited about the new economy in the Gulf. It's growing very fast. E-commerce is going to grow from $20 billion last year to $200 billion in 3 years. That's a 10-time increase. We've done 5 technology deals, and every one of these companies is growing so fast. So what's happening to us is what happened to China, where the old China versus the new China are growing at different rates. And I think now is the time to look at the new economy in the Gulf.
Okay. I'm not going to talk about the industrial part of the region because it becomes very specific. But in general, I think in the region, you're seeing a shift from public to private. So infrastructure There's plenty to be done in the infrastructure place, be it renewable energy, energy in general, power, logistics, etc. I think there is plenty to be done on the private sector there.
Great. Thank you very much to my panel. We haven't got the poll results. I haven't seen them. They're supposed to be, I think, on the screens, but I'll make sure that they get announced at the next session. But thank you very much to the panel, and we're going to break for lunch now. Thank you.